Hello students, this is Balakrishnan. Welcoming to BALAS Accountancy Special Classes. Well, in the last two episodes, the chapter Depreciation has been going on. In continuation of the same, today I'm taking up the ledger preparation. Let us start with the preparation of asset account. Today only two practical sums under straight line method, that too under straight line method. Further, whenever preparation of the various accounts are necessitated, I find it will be more effective to share the worked out answer in the computer and explain the same sufficiently rather than using the whiteboard, using this whiteboard behind me. However, before proceeding with the sharing, two important points I would like to explain using this whiteboard. Point number one, GST implication. Well, GST paid at the time of purchase of an asset, that is called input GST, as well as the GST paid on sale of an asset, that is called output GST, are to be ignored and not to be added to the value of the asset. I repeat, and not to be added to the value of the asset. It should be summarily ignored for the time being in this chapter. Reason being, this input GST as well as the output GST can be set off each other in due course. You will learn more about it when I will be taking up the chapter GST. For the time being, just ignore the GST amount pertaining to the purchase or sale of an asset. Well, while sharing, to be followed soon, I'll be giving you the complete journal entries in respect of maintenance of an asset account with sufficient explanation. Okay. However, before that, just keep in mind thoroughly these very important steps. Steps on the date of sale of an asset. There are 3-4 steps. Step number one, ascertain the current year's depreciation in respect of the item sold and make an entry for the same. Entry, what will be the entry? I'll be telling later on. Current year's depreciation means, suppose it is sold during mid of the year, only 6 months proportionately, or 9 months proportionately, or 3 months proportionately. That then and then you make a separate journal entry for depreciation. That is nothing but depreciation to asset. Okay, fine. Next one, ascertain the profit or loss on sale of the asset by comparing the book value of the asset as on date with the amount realized. That means every year beginning, you have the separate book value of each asset, and the asset has been sold during the year. The pending depreciation also, you reduce from the year beginning book value, and this is the latest book value. Have it compared with the amount realized and determine the profit or loss. You will be very thorough when we take up the two sums. Third step, and make the bank entry as well as the entry for the profit on sale. Bank entry will be bank to asset. On sale of an asset, it may be verified that cost of the asset is equivalent to amount realized plus till date total depreciation plus loss or minus profit. Well, now let us do the main work. Two sums, and it should be preceded with the explanation of the relevant journal entries. Thank you. Well, students, ledger maintenance in respect of depreciation chapter. Before we tackle any ledger account, how to maintain it, it is essential you should know the pertinent journal entries for it. So each journal entry pertain to the ledger, asset ledger. I'm explaining. But before that, I would like to say, in my initial videos, BSc 01 and 02, etc., I had thoroughly given the grassroots level explanation about how to propose a journal entry, how to post a journal entry, a ledger, etc. I hope you have mastered it by this time. Otherwise, do it fast. Watch my video over and over again, if required, and master it. Else you won't be comfortable in the days ahead. Well, these are the journal entries in respect of an asset ledger. Entry for purchase of an asset account debtor to bank or vendor account. This particular journal entry from the grassroots level I am explaining. Asset account, a real account, debit to accounts, bank account or vendor account, personal account, credit the giver. Fine. Next one. Entry for providing depreciation at the end of each year or at the time of sale of an asset if required. compulsorily every year end you have to make a depreciation entry, or as a special case, whenever an asset is getting sold during the year, you have to make an entry for depreciation. And why I said depreciated means if the new asset, the asset is just sold on the very first day of the year, it need not calculate any proportionate depreciation. That's what I have written if required. Well, whenever you have to pass a journal entry for depreciation means whether in connection with the sale of an asset or the customary year-end depreciation, the entry will be depreciation account debtor to asset account. Next one, entry for the amount realized on sale of an asset, bank account debtor to asset account. Next, entry in case of loss on sale of an asset, profit and loss account or statement of profit and loss account debtor to asset account. Why there is an option profit and loss account and statement of profit and loss account is that profit and loss account, well, for proprietorship and extra only that's allowed. In case of a limited company, it has to be replaced with the way statement of profit and loss. You learn all this later on when we take up the final accounts. Okay. Well, you can invariably use statement of profit and loss. I don't think you will be penalized for that one. Okay. Next, entry in case of profit on sale of asset. Asset account debtor to profit and loss account or statement of profit and loss account. Or in other words, reversal of the entry 4. So these 5 journal entries you have to be very thorough. And rule of posting from journal to ledger, you know that. For example, bank account debtor to asset. It is nothing but asset by bank because A account debtor to Y is nothing but Y by X. The rule of posting I mentioned in my BSc 01, 02 probably. Okay, please refer my initial videos that will immensely help you. Well, now let us tackle the first sum. Well, students, the first question what we are taking up today is question number 2, page 16.5 of DK Goel, Cbse 2019. Okay. Well, I'm reading out the question while displaying it. On 1st April 2015, a company bought plant and machinery costing rupees 68,000. It's estimated that its working life is 10 years, at the end of which it will fetch rupees 8,000. Additions are made on 1st April 2016 to the value of rupees 40,000. Residual value rupees 4,000. More additions are made on 1st October 2017 to the value of rupees 9,800. Breakup value is rupees 800. Breakup value is a synonym of residual value. Well, the working life of both the additional plant and machinery is 20 years. So here itself, we find that there are 3 machines in question. First machine is residual value is 10 years. Second and third machine residual value is 20 years, right? Date of purchases have been given, and the eventual requirement is show the plant and machinery account for the first 4 years. I repeat, show the plant and machinery account for the first 4 years if depreciation is written off according to straight line method. And the books are closed on 31st March every year. I think you have written down the question. I mean, those of you need it. Well, now let me work out it for you. Before we work out any question, first is the working sheet. The systematic way if we move, we will be happy, we will get more marks also, our work will be at ease, right? So already we have observed there are 3 machines. So primarily we have to see year-wise depreciation in respect of each of this machine. And the fundamental formula in respect of straight line method, annual depreciation is equal to cost of asset minus scrap value upon estimated life of asset. So in respect of first machine, 68,000 is the cost of asset and scrap value given us 8,000. So 68 minus 8,000, 60,000 divided by estimated life of asset 10 years, so 6,000 over. Second, 1,800. Why divided by 20? Because estimated life of asset has been given as 20. Third machine. Third machine will see the machine did not sustain the full year in the date of purchase. Only mid of the year it has been purchased. So full year depreciation is 450. How? Cost of the asset minus scrap value upon 20 years. So it comes 450 rupees. But whereas I need the first year only half year depreciation. That is divided by 225. So depreciation part is over, right? Now let us take up the ledger. So we know the journal entries. Journal entry has been already taught to just now. Just place the relevant amount against the journal entry. 1st April purchase to bank 68,000. Thereafter, I find there isn't any purchase till the year end. So I'm straight in the process of calculating depreciation at the year end. By depreciation, 6,000, it has already been calculated. And close the book. How to close? Total heavier side, put the same total across, find the difference. 62,000. Balance carried forward. Bring it next day, 2016, April 1, 62,000. Okay. I find on a careful examination, there has been a purchase on the very first day. So to bank 40,000. Now depreciation. When there are more than one machine, we have to show everything machine wise. So by depreciation account, first machine 6,000 because we have already calculated it's a 1 year depreciation is 6,000, and it being under straight line method, it will be consistent amount. And second machine we have calculated as 1,800. If any doubt means go back to your working 6,000 and 1,800 annual depreciation. Fine. Then total depreciation is 7,800. Now close the book. Decide 1,02,000. Put it here. You find a difference of 90 for 200. That's the balance carried forward. However, machine wise you have to check it. 62,000 minus 6,000, 56,000. 40,000 minus 1,800, 38,200. This is equivalent to this. This is the systematic way of doing. When we show the depreciation entry, when there are more than one entry, we have to separately show the breakup of the depreciation. And also, when we be showing the year-end closing balance, machine-wise breakup has to be shown. Fine. Now let's move to next year, 2018, right? Balance brought down on April 1st. As it is, the closing balance has been brought down. Well, I find mid of the year, in this particular year, there is yet another purchase. So to bank, 9,800. There isn't any further. So let me do the customary depreciation calculation. By depreciation, machine number 1, 6,000, machine number 2, 1,800, machine number 3. Machine number 3, only half year depreciation only is required. I have shown in the working, okay? Because it has come to the picture only mid of the year. Fine. So that's it. This is the total depreciation, 8,025. Balance the account, total heavier side, put it here, find the difference, it is this much, and show the breakup. Of course, if you have done the proper work, the breakup has to be equal to your closing balance. 56,000 minus 6,000, 50,000, 38,200 minus 1,800, 36,400. And this 9,800 minus 225, 9,575, as clear as water. Fine. And bring it down next year. As it is, you bring it down April 1st. The same amount has been brought down here. Okay. And I find there isn't any purchase whatsoever in this year. So depreciation for all the 3 machines. First machines, how much it is? We have already calculated 6,000, 1,800. However, in respect of the 3rd machine, this machine in this particular year, it served as full years and the full depreciation for the year. What is the full depreciation for it? 450. So therefore, we have taken it, and the total comes how much? 8,250. Okay. Fine. Now balance the account. Total heavier side. Put the total across. Find the difference. I find it 87,725. I'm again reiterating. Please watch my initial videos BSc 01 and BSc 02 extra, because this ledger maintenance will be a major part of your study. So those of you who have not mastered it, please watch it again and again and master the art of how to maintain a ledger. Okay, let us make your work very comfortable. That's what I say in a very systematic way I am taking up. It's not that I don't know the ultimate problem of your syllabus, but there's no meaning in just jumping like that. Take up gradually. So that's what I told you. First itself, master the art of generalizing, then how to ledgerize this and how to balance a ledger. That's the initial videos you have to master. Those of you are not mastered. Okay, fine. Now, How to balance this ledger? Total heavier side, put it across, find the difference. I find 87,725. Then machine wise breakup you show 50,000 minus 6,000, 44,000, 36,400 minus 1,800, 34,600, 9,575 minus 450, 9,125. And it has to be equivalent to this one. Fine, that's all. And this 87,725 is the answer given by our respectful author. So, well, students, next question, practical question number 4. A Limited purchased the machinery for rupees 5 lakh on 1st April 2012. Further additions are made on 1st October 2012 and on 1st July 2013 for rupees 4 lakhs and rupees 3 lakhs respectively. On 1st January 2015, first machine was sold for rupees 2,85,000 and new machine was purchased for rupees 6 lakhs. Prepare machinery account for 3 years ending 31st March 2015. So this is the financial year. That means 31st March, April to March. That you have to carefully see. Sometimes it will be calendar year, January to December. No, here it is April to March. Fine. If depreciation is to be charged at 10% per annum on straight line basis. So depreciation rate has been given to us. So we need not adapt the formula here because straight apply this 10% on original cost being under straight line basis. Now let me work out the sum for you. Before we do any sum, it's better to do the workings first. First machine is served us the entire year. So 5 lakhs, 50,000. How it is 50,000? 5 lakhs into 10 by 100, 50,000. And the second machine that was purchased during that year, it was purchased mid of the year. So annual depreciation 40,000, half yearly depreciation 20,000. Is the rate. Is the rate. Rate we applied on the book value. Okay, fine. Let me first year let us account it. 2012, April 1 to bank 5 lakhs. Chronologically, you should proceed. Okay, next event happened on October 1, yet another purchase to bank 4 lakhs. Now, year-end depreciation. By depreciation, I find first machine 50,000 and second machine 20,000. Workings, I am getting back to workings. 5 lakhs into rate, 50,000. Second machine, 4 lakhs into rate, 40,000. However, it came to the picture only half it of the year. So half yearly depreciation, 20,000. So that I am showing here, 50 and 20, totally 70,000. Now I have to balance the account as usual. Total the heavier side, put it this side and find the difference. I find 8,30,000. Since there are more than one machine, breakup has to be shown. Yes, first machine. 5 lakhs minus 50,000, 4 lakh 50,000, 4 lakhs minus 20,000, 3 lakh 80,000. And that is equivalent to this one. Fine. Next one. Let me bring down next year. Next financial year, April 1st. As it is, I have brought down 8,30,000 with the same breakup value. Right. Next, chronologically, I find on July 1st, there is another purchase for 3 lakhs to bank. Now, year-end depreciation. Okay. No more purchase, no sale, nothing happened in this financial year, 2013-14. Right. First year, depreciation 50,000. Second year, last year, well, it was 20,000 for half year. Whereas the full year depreciation of the second machine is 40,000. It served me full year this year. Hence, I am showing 40,000. And the third machine, how much? It served me only 9 months. So 22,500. Because it was purchased from the date of purchase till the year end. I find only 9 months. So that is also taken. 22,500. And the total depreciation is sum of this one. That happens to be this one. Now what to do? Close the book. This year. This side total comes this much. Okay. And 11,30,000. Put it here. Find the difference. 10,70,500. That is the balance of the year. However, I had to show the machine wise. 4,50,000 minus 50, 4 lakhs, 3,80,000 minus 40,000, 3,40,000, and this purchase new machine 3 lakhs minus, and it's a relevant depreciation 22,500, this much, and this is equivalent to this one. It has to be like that. Okay, fine. Let us proceed to the next financial year. As it is, I brought down the balance 2014 April 1 balance as it is. It has been brought down. But chronologically, I have to proceed. I find on January 1st 2 events. One, there is a sale, and another there is a purchase. Okay, purchase letters being a simple straight case. I purchased for 6 lakhs to bank 6 lakhs. Now sale. Well, sale, how to proceed? Let us go to the workings. Sale of machine. It was purchased on 1st April 2012 and sold on 1st January 2015. Okay, because first machine sold, they are told. Depreciation. First step is to account for the pending depreciation for the current year. Yes, cost of the machine and the rate. It served me 9 months. So depreciation comes 37,500. So that let me account first by depreciation 37,500. And of course, it has been clearly given. It realized I sold it for 2,85,000. I can straight show that entry by bank. I hope you are very thorough by this time, the journal entries which I just explained. Okay. So by bank, 2,85,000. That's the amount realized they are categorically given. Then I have to find out the profit or loss, and it has to be credited to the asset account, because the journal entry is that statement of P&L account debtor to asset or asset by statement of P&L account. Now this amount, how I got? I'm explaining that. Well, if you are not understood that this 37,500 means it is nothing but the machine served me only for 9 months. So 5 lakh into 10 by 100 into 9 by 12. That's why that particular amount. That means the pending depreciation in respect of the item sold is 37,500 only. Now I am in the process of finding the profit or loss on the item sold. Fine. Initial cost 5 lakhs because it was first machine. Fine. Sale proceeds just categorically given up 2,85,000 until date depreciation. But that means from the date of purchase till the date of sale. It served me 2 years and 9 months or 2.75 years with an annual depreciation of 50,000 per year. So it will come 1,37,500. But you can calculate yourself. 1 year 50,000, next year also 50,000, 1 lakh, and third year 37,500. That's why 1,37,500. So the sum of these two you reduce from the original cost. I find 77,500 is a loss. Or in simple way, to put it simply, an asset having book value of 3,62,500. Why it is book value 3,62,500? Original cost minus accumulated depreciation, or the depreciation charge till the date of sale. From the date of purchase till the date of sale is 1,37,500. This minus this, that is the book value. That has been sold for 2,85,000 only, resulting in a loss 77,500. That loss has been accounted here. Clear? Fine. Now, of course, this I told you already, there has been purchase. We have clearly accounted it. Now, year-end customary depreciation accounting. Please keep it in mind. The item that has been sold is not at all in the picture, and we don't have to calculate any depreciation. So machine 2 is to be considered first. Machine 2, what was the depreciation for the machine 2? 40,000. I am showing it because it's straight line method, full year. What was the full year depreciation in respect of machine 3? Well, there you don't make the mistake. Why? Because this is a proportionate depreciation only, where the full depreciation for machine trade is 30,000. This year, the machine has served me the full year, no? Hence, I am showing that 30,000 in respect of machine 3. In respect of machine 4, it came to the picture for a few months only. How many months? Only for 3 months. For full year depreciation was 6 lakhs into 10%, 60,000. For 3 months, 15,000. That 15,000 only I should account here. So 15,000. So all the machine in the picture, first machine is not at all in the picture, so not to be considered at all. It has been sold out. Second machine, third machine, and fourth machine. These are the respective depreciation. Sum of it comes 85,000. Now we have to balance the account. Well, how to balance the account? Total the heavier side. Put the same total across. Find the difference. I find 11,32,500. That's the answer given by the author also. However, we are verifying it with the machine-wise balance. First machine is not at all in the picture, so ignore it. Second, 3,40,000, year beginning balance, minus the depreciation, 30,000, so 3 lakhs. Second machine, third machine, 2,77,500, year beginning balance, okay. And its respective depreciation is 30,000, so this minus this, 2,47,500. And third machine, purchased during the course of the year, 6 lakhs, respective depreciation 15,000. So 6 lakhs minus 15,000, 5,85,000. We have shown the closing balance breakup also. So that's all in sum. I hope you have understood it. But my students, you have to practice it nicely. Okay, then only with the limited time you will be comfortably doing in the exam. Well, that's all today. Thank you. Take care.